Today in the classroom, the guys were taking us through their pain trade ideas. So we spent some time in the last session talking about the idea of pain trades, what pain trades are, and how you might include some non-consensus ideas in your portfolio to help hedge out any pain trade risk your portfolio might have. So we're going to see what the guys have put together. They'll take us through their thinking as to what they think the pain trades are for 2016, 2017, and take us through stocks they've selected that make sense around that pain trade. We'll do some quantitative analysis, hopefully some good qualitative analysis, and I imagine we'll look at some charts to think about timing entries into the stocks that they've selected. And hopefully we'll see some real progress around, start to finish from the process. They go through it all, they nail it all, get it all right, and we can see some real development in how they've learned and how they're approaching it, and hopefully there aren't too many holes or gaps.
Okay, so last session, pain trade drivers and pain trade ideas. So the question is, is there still an oversupply of oil in the market?
Yeah. If everyone else devalues their currencies, then they have more purchasing power.
If we believe this is going to happen, what's the long idea? In the box of mega rally nonsense.
Mega rally nonsense.
No, but that's the point, is it'll be a rally and everyone will think it's nonsense. But if you don't participate, you lose it. That's the problem. If they get caught out by this and don't see it coming, it could really cause them a lot of pain. But if they're aware of it, they could actually hedge themselves and position for it and actually make a ton of money out of it. What do people think in the world? How are people positioned? And then you start to realise that things don't add up, things don't stack up. And expectations are actually way out of kilter versus the reality of what could happen. We'll put it in blue because it's easy to go to the sky. Okay.
Showing us his view on the best stock in the energy sector, specifically the oil refineries sector, as he thinks that's the obvious place for a pain trade reversal. We spent the morning, Anton, going through more of the macro side to see what the likelihood is for a continued rally in crude, what would need to take place for crude to continue to rally, what is the likelihood of that happening, and ascertain that the idea of crude being a pain trade makes sense. So now we're looking at the absolute best company in that space, and looking at its data versus the sector.
Other refineries in the area, competitors, have been hit by severe weather and they just blown out of the area. So the last quarter of last year, they were getting a lot more orders, a lot more business.
Okay, what was the weather system that knocked everyone out? Is this like forest companies, public and shrimp company?
That's the analogy that I'd like to use.
Okay.
What the market is ready to pay for such a growth is relatively low.
The pegs.
The PEG and the PE also.
Yeah. Analysts have these really bullish expectations, but for some reason the market just doesn't believe it or isn't giving the benefit of the doubt to the stock yet. So there's a lot of risk, but there's also a lot of opportunity. The point here is the pain trade is your hedge if you ever fall into the trap of having consensus trades on and you end up with no negative correlation in your portfolio. But we're recognizing the pain trade and going one step further and actually trying to make money from it. Like I actually quite like that trade.
One area I wasn't too happy about. Other than that, it's good. Anton says it's a good trade and I should put some money on it and forget about it, and then the pain trades come off, could be quite a sizable return.
If everything we say works in the way we think it's going to work. but no more than 20% of your portfolio should be exposed to this at any one time.
With 12 constituents when I've done this filter, above 10 million. So I ended up with mostly full of airlines, but you have some rail, just a few rail, transportation, and pipeline transportation. They're all similar from a market cap point of view. Most of their business is 98.7% in the US, and they have a sort of a international, but with Mexico.
So there's no currency
very
risk.
small.
Yep.
No, the currency risk. So very minimal.
Maybe they just put in a big oil hedge here at the low.
Yeah.
They've just gone massively long oil
Yeah.
via a big hedge at the low for 2 years starting yesterday. And Goldman's Morgan Stanley upgraded them yesterday. And it's not short.
Yeah.
What are the drivers for the pain trade specific to this idea?
Is oil price to increase? So I have done a selection on transportation, warehousing, and to my filters on that is on companies in the US, and companies market cap being greater than 10 billion. They mentioned that they hedged, obviously, for a period of 2 years, but I couldn't find end date for that hedge. But I know that they started to hedge last year. Couldn't find anything negative related to this, this move from 20% to 2%. Doesn't mean that it doesn't exist. But I read the earning report for early this year. They report in mid-April, 21st. So maybe I will have more indications on the next report.
So, if we're going to short this stock based on a higher oil price and a pain trade, what we want to be looking at encapsulating is a calendar that can actually capture it over a long period of time.
No, 875.
You're getting close to. If it works, you make 6,500. So if you put $1,000 into this, you're going to make 6,500 if it goes to 30. It's not a bad trade. It looks quite good. Yeah. So, to summarize that process, it took a bit longer than expected today to go through that process. And again, the point of it is that you have to see the whole thing from start to finish. It's a bit of work. You've now seen it twice properly from start to finish. And we've ended up concluding on both occasions that we can actually go and purchase and commit capital to these ideas.
It's good. The guys work well together. They gelled well together. There was no one here who kind of slacked off or couldn't keep up or couldn't follow the coursework. So I think it's a strong team. I'm really pleased that they've spent this time together going through this process together. It should make them all much better traders individually.
I think we're about done. What you should probably do now is just take a break. Take a break from looking at this stuff for like 5 to 7 days. Get some rest, ease back into life on the other side of the world. And I wish you good luck, gentlemen. I'll be watching from the back end.
Thank you.
Cool.